Google is done, right? Google can't seem to get a break, and when you look at Yahoo Finance, all you can see are articles like these. Bad articles highlighting just how bad the company is actually doing. Now, the stock price is also going down, and this was the reason for me to take a look at their annual 10K report to see how bad the company actually is doing. Because as they say, truth is in the numbers. Now, before we start, welcome to Growing Quality. My name is Elian, and I look for stocks which are growing their moats. So let's begin with the basics, because Google is way more than just the search engine you think of with the word Google. So, how does Google separate its business? Well, you have Google and you have Alphabet. Alphabet mostly contains the other bets. So, think of investments like Waymo or Google Nest, investments that should open up new markets. And then Google can be separated into two more segments, which is the Google Services and Google Cloud. Now, under the Google Services umbrella falls Google, the search engine, of course, but also the devices like the Pixel phones or the Pixel Watch, and also YouTube. Now, with the Google Services, you can also think of Android or Google Maps, also Google Play is in there, and a bunch of other stuff. The Google Services side of the business mostly makes money through ads, but it can also be through subscriptions for such as YouTube Premium or YouTube Music. Now, after the Google services, we get to Google Cloud. And this is where it gets a bit more complicated because Google Cloud offers a range of products coming from the databases or the Google workplaces, but it also has a bunch of AI offerings. Under the Google Cloud, they also have some cybersecurity solutions and analytics products. Now, when looking at other bets, these are only products that lose the company money. And they know this and they are fine with it because they are moonshot opportunities with the hopes of bringing in or opening up new markets in the future. Now, for other bets, you can think of Waymo, Google Nest, or some internet services. If we look at the revenues per segment, we can see that Google has increased their operations in almost every segment. Except for the hedging, revenues were down there, but that's not the most important part. And if we look at the revenues per region, we can see that these were up everywhere. The company grew between 8 and 11%, with 11% being in Europe, the Middle East, and Africa, and 8% in other Americas. So, what did this mean for the company when it comes to profits? Because the profits will tell us if the company does better or worse than before the AI hype and before all the bad news started. Well, the company did $307 billion in revenues. Of those 307 billion, about 133 billion went to the cost of revenues. This was up 6% year over year, which was lower than the 9% growth in revenues. Now, operating expenses were up 10% to 89 billion, but this means that the operating income was up 13% year over year to 84 billion. Now, if we look at the bottom line, we can see that Google has made almost $74 billion of net income, a figure that is up 23% year over year, and they managed to increase EPS even faster at 27% year over year. Now, if we look at the profitability per segment, we can see that Google Cloud and Google Services were both profitable. Google Cloud was even profitable for the first full year. And now you might think like, okay, is that so special? Well, Google Cloud is competing with Microsoft Azure and Amazon Web Services, and basically was the only one that wasn't profitable and that is lacking growth. So Google Cloud now being profitable is quite a big thing actually. If we look at other bets, we can see that losses have somewhat decreased over there. But when we look at Alphabet level activities, we can see that losses increased massively. We have already established that Google is more profitable than they were last year, before the AI hype. But now let's look into the monetization part. Because this table shows us more about how Google is doing on the search part. basically the core business. Now, the table shows that clicks are up 7% year over year and that advertisers had to pay 1% more per click. But just imagine the scale of it, so how far that comes. Now, let's look at Google's balance sheet, because for most people, this has been center of their bull thesis for Google. Now, this table doesn't show it, but Google actually only has a debt of 9 billion. $9 billion in debt, standing against $110 billion of cash and cash equivalents. That's truly remarkable. They have a fortress, an absolute fortress of a balance sheet. Now, as we just saw, Google had a net income of 72 billion, and they used a lot of it. And I mean a lot of it to buy back shares. The company bought back $62 billion worth of stock last year. And although this sounds like an incredible amount of buybacks, we kind of have to give a little bit more of color to it. Because in the last 3 years, the stock based compensation expenses for Google went from 15.5 to $22.5 billion. So even though Google has been buying back a ton of shares, they also kind of have to, because they are also giving out a lot of shares. So, in order to summarize it, let's look at some of the negative parts and some of the positives. But starting off with the negatives, I think the biggest thing is the stock based compensation. This is just for investors, as you think the company does $62 billion in buybacks, but actually they are diluting you for 22. So that comes out to $40 billion of stocks repurchasing. And believe me, I also find it a lot because they are buying back a ton of shares. There's no way around it. But giving out so much stock based compensation is kind of making me wonder why. And the why is actually quite simple, because this is most likely due to Google Cloud. Now, Google Cloud is the third player behind Microsoft Azure and Amazon Web Services, and it's number three by far. They have to invest an incredible amount into this segment, and the outcomes are, well, they are somewhat unknown. We will know that it will become profitable and most likely become wildly profitable, but by how much we do not know yet. The final negative I want to point towards is the other bets category, and mostly the other bets which are hidden under Alphabet, because the company took $9 billion of losses in there, and this is also investors' money. So for me, the stock based compensation, Google Cloud, or the way it is run right now, and the other bets are the negative parts of this company. So the positives I see for this company as an investor are Google Search, YouTube, and the way in which the company can allocate capital in the future. So, as we have seen, Google Search is not going anywhere. ChatGPT might be competition, but I think it's mostly for a select few. I do not think that the average user of Google is interested in ChatGPT. As for ChatGPT, you have to give very specific prompts in order to get the answer you want. As for YouTube, this will always be a beast. It's YouTube. You go there when you want to learn something, when you want to have downtime, when you want to listen to that new song, or just for any other thing, you just want to watch a video, you go to YouTube. They also say YouTube is the second largest search engine behind Google. And finally, like I said, the future for capital allocation. We have seen that Google has a ton of free cash flow. They buy back a ton of shares and they have some room to grow there. Now, as I look for capital allocation in the future, Google has some room to grow there. That's true. But I also see what other companies are doing and how much cash flow Google has. Right now, they buy back $62 billion worth of stock. But look at what Facebook just did last quarter and what Salesforce has done. They started paying a dividend. But these are also companies that buy back a ton of stock. Now, I think Google might be next. And I think they might do it in the coming year because they look at Meta and they see what Zuckerberg is doing and they see that it's working for the share price. So I would not be surprised if Google starts paying a dividend in the coming year. Now, let me know if you think Google is done as a company, and don't forget to hit that like button and subscribe.